server URL? What the? Let's see if my mic works. Man, blowy. Alright, hello, hello. Hello, hello. Hello, hello. Let me change this thumbnail to Warren Buffett. Money. So good. Yo, my internet. It's killing it. Whatever. Hey, we got 2 watchers. Alright. Yo, Moises Pantoja. How you doing? Alright. We're setting up the server right now. Basically. Here, I'll use this. Why not? Desktop. Buffet. There's some feedback here. Alright, we're good. So basically what we're going to do today is I'm going to be, I have some certifications. I'm allowed to give people advice, solicit advice, and I thought, why not spread my knowledge with the world? Why not help people? So that's what I'm going to do. I'm going to help people. Just gotta make sure that works. Alright. And I have to figure out a way to get my YouTube dashboard to show me that shit without me having to check down here, because that sucks. Well, maybe I can just go to the actual site. Okay, I'm gonna go to my dashboard, I guess. Maybe I'm struggling. My channel. Let's try this shit. Nope. Not there. How do I do a live? Oh, here we are. Whatever. Alright, so I'm going to be looking at, let's look at some stocks that I don't generally look at, and we can try to understand them a little bit better. I'll just see what Medtronic does. So basically, everything went through this giant crash in December. It's been rallying ever since, pretty much. A little bit of stumbles, but it's basically nothing. I mean, I like this website a lot because it kind of gives you a overall image, but it shows that it's sort of trading in this large channel, which generally doesn't happen. If I had to look at this stock specifically, you could draw a line right from here to here, and it would probably be a downwards head and shoulder pattern kind of emerging, which means the stock could sort of come right down here about, and then maybe come up this way a bit. If once it breaches, it'll create a sort of a higher low right here somewhere in the future, maybe in a few months it looks like, and then continue up here a bit, and hopefully there'll be some sort of resistance over here. Let's see what we got here. Let me make sure that works. So what does this company do? It actually has a really good forward price to earnings ratio. That's pretty incredible. But what does Medtronic do? No idea. Nice dividend for every share it has, which each share trades for about $92. Dividends $2 out of that. And they make about $7 per share, so that's a very safe dividend of 2%. And that means they can use that extra money to put it into other things, like growth. So I assume they're like a specialty pharma type thing. Oh, medical appliance and equipment. Take a look at that a bit. Let's see what we got here. World's largest medical device company. Play some tunes. Profits from the healthcare system. Alright, so we're learning about Medtronic today. They do the double Irish, which means they're located in Ireland. They don't really pay taxes. Largest U.S. corporate tax inversion in history. Anyways, I'm just looking at Medtronic because I like to know about stocks that I generally don't find that interesting. So if you have another name, you can look at anything, whatever, cannabis stocks, even Bitcoin. I'd probably just do some sort of technical analysis on them and could probably draw that out a bit. Being serious here. So anyways, we're doing Medtronic here. Actually, that makes more sense. So I go like this, and then I go like this, and I go like this, I go like this, this, and like this. All right. Would I buy this company? I'm not quite sure. Sort of Trump tariffs kind of have been increasing the price of things. I guess that's not such a bad thing, but I don't know too much about their products exactly to say how much Trump tariffs would actually, wow, look at this. It's crazy. Used to own Neutrino, then Mazor, then Crospan, then Heartware, then Belco. I'm guessing it primarily grows from mergers and acquisitions. Which I guess is popular in biotech. Let's look at something a little bit more interesting. Let's look at Apple. Why not Apple? Alright, so basically, here's the story of Apple so far. Buffett decided to buy a whole bunch of it. Actually, we could do a different chart. This chart's kind of too small. Even monthly might be a bit better. Yeah, so about 2016, 2017 was massive. It was trading around like 10 price to earnings ratio, which means about for each share about 10% of it was made cash. Should I YOLO take two? Let's see, why not? Damn, son. I actually have a little bit of take two, so if I'm in out for the long haul, but yeah, that is an ugly. I feel like there has to be some bounce back, but just the video game industry entirely has been really. I'm not sure how much I can swear on my channel. I normally try to swear, and I'm probably talking like an idiot right now because I feel like I shouldn't swear. But the whole video game industry has been in the shitter, and Take-Two is no exception. I think it's a pretty good stock to YOLO on, but I'm not quite sure in the short term where it would go. You could probably buy some out the money. How about out the money calls and out the money puts? And then if it goes either way, you're good. Maybe if you could buy an out the money put at around 83, and then maybe an out the money call at around 90. But it makes Rockstar, Rockstar Games is amazing. Like, all they have to do is announce another Grand Theft Auto 6. So, yeah. If they have Grand Theft Auto 6, that's going to come out maybe, it's like 3 or 4 years. And then they're going to have Red Dead Redemption online. And you can be certain that management doesn't want this story of just declining stock price. They don't want this to be their history. They don't want this to continue happening. So they're probably going to do something to try to stop that. That is a massive fall. So the only thing that I see with EA is that it's, how do I put this? Apex Legends has a lot of hype, and it's actually quite a smooth system. It's very similar to Call of Duty Black Ops or Black Hawks or whatever, but let's see. I'll bring up the chart anyways. The difficulty with Apex Legends I don't think will be a cash cow, but I think it has a lot of good titles in EA, such as what would be a good title? Like The Sims. They have these franchises that are very, 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 very strong. And like the short-term chart on that looks like it's primed for a bounce here. So basically selling pressure is kind of dipped a little here. Now, I'm not sure if that means, I feel like it might have a couple days trading right here, and then it's either going to go boom, or it's going to start making moves up again. I don't think Apex Legends is going to carry it. I think there's probably more news stories in the cycle saying Apex Legend losing players at a certain rate. People play a game for like a week and then they leave it. Unfortunately, I think I see EA retracing back to 90 faster than going up to 105, 110. Also, it's not very easily monetizable, their game. It only has one game mode. It's like a 3-player game. Not everyone's into Battle Royale that much. People have already probably spent a lot of money on Fortnite. Like, how much money do they have to devote to free-to-play Battle Royale games? I think it has a lot of hype with it. And the hype drove it from going from 80 to 105, but I don't think that's sustainable. I'm going to look up ATVI because that's another one. Now, for some reason, Reddit shits on ATVI all the time, and Let's see the weekly. Oh god, that's an ugly chart. That's a lot of sad people right now. Wow, it has a price to earnings ratio of 17. Damn, that's pretty cheap for a video game company. People pretty much think that Battle Royale has changed the face of video games and that no other companies can create video games that will be as successful. And I think that's kind of what's led to the demise of Activision Blizzard as well. That Fortnite came around and then it was propped up by Tencent. Yeah, we should probably, I guess, I wonder if we can look up Tencent. No. Wow, they only have the Tencent music group. Yeah. I mean, some of these video game stocks, now for quick money, I'm not quite sure how you'd do that. You'd probably have to be very, very more, like, aware of the short-term movings, and probably some numbers to look out for is if it breaks under 40, like if it's at $39.60, it's probably going to come right down to 35. And if it breaks 45, then it might have a little bit more movement to 50. It's tried to break 45, I guess this would be about a week ago. Had a few days where it was trying to push above that. And now it's trying to retrace back to 40. People are saying, what is the true value of the stock? And there's a bit of bearish sentiment, I guess. It's continuing down. It's going to be a big journey for Activision Blizzard. It's insane how far it fell from 65, and then the next day you wake up in the morning, it's at 55. It's like a 20% drop, and it's never returned to that. So even if you sold the next day out of fear, that was probably a good idea. Yeah, it's odd how not hot video game stocks are right now. Let's see what else is on the old list here. Yeah, pretty much those are the big ones. Moo. Let's see how our boy Moo's doing. Wow, that's actually kind of a nice chart. I wouldn't take this line right here as to be very meaningful. Although if I looked maybe a bit closer at it, there was some resistance right here. So yeah, it seems to, there's sort of like a level of 40 right here that's pretty psychological. I guess it's approaching 45 a bit. It's kind of in the sort of ramshackle way. I've been noticing that other sectors that include chips and hardware for computers, like NVIDIA. Let's see what we got there. Where is our boy NVIDIA? Well, Intel. Intel's a good example. So look at Intel here. It's been trading in this range for, yeah, about 6 months. And now it's only broken past 50 here. And yeah, that's pretty good. It kind of shows there's a resurgence a bit. There's a bit of a resurgence in chips where there was kind of that Bitcoin boom where everyone was buying up video cards and creating these computers to mine Bitcoins, and as soon as that crashed, so did the entire market for pretty much all things electronics. And Moo a bit was into that, but also Moo had also, or Micron I should say, I should stop calling it Moo. Moo. But Micron here sort of fell into the same sort of trap, and it had a price fixing scandal on its memory, which is a bad place to be, and it was made in China, which means that Trump's trade war is like really not helping things. Let's see what the idiots are saying online. Hey, stop going down. Damn weird action in Moo today. Why is big money so hell-bent on having Moo at 43 today? Yeah. Bye. It's an absolutely no-brainer for them exchanging their paper for 20 to 25 times earning. Whatever, bro. Unfortunately, people are very either bullish or bearish on stocks. You can't really get a good um, sort of rational look at what stocks are just by going on StockTwits or some shit like that. It's possibly the worst thing you can do. Because you pretty much it's just you confirm your own opinions. So if you want to buy something, you go on StockTwits, and then you see other people, hey, you should buy it, and you forget everyone who's saying you should sell it, and then you buy it, and you're like, haha, I'm right, they're wrong, because other people agree with me, I'm also right. Let's look at some Visa right now. This is like Visa's in a really weird spot for me. In the short term, like maybe 3 years, I see Visa doing pretty well, but I'm not sure how they're going to do in the long term. Because if you look at China, I watched this video on China, and it was like everyone pays with their phones by taking screenshots of like QR codes. And it seemed like pretty cool. And it might even replace like taking out your card and tapping it. There's like this whole system where, oh, you want to buy something, you just take a picture of it with your phone, and then it scans the QR code, it automatically takes out money from your account. Seems pretty sick. But I'm not sure how American consumers would adopt that technology. Let's check out some other stuff that people are looking at. Microsoft, this is my boy. Oh god, it brings me to this website. Anyways, we'll go here. Wow, Microsoft is coming back to try to attack that 11 to 15 range. It's past 11. Now this isn't the healthiest of run-ups. I wonder if we can zoom up. I'll zoom up a little bit on that. If you notice, there's these gaps here, and that generally means there's a lot of buying pressure in the short term. There's not exactly that much volume that could be seen as any different from here. So it's not like there's been groundbreaking news that has forced the stock price up. It's just going up probably to positive market conditions. This little gap, it's kind of what's happening right here. See, this was a big gap. Then there was some, this is where people were confused a bit, and then there's another gap up here. It opened the day somewhere up here, and then it fell all the way back down. So I would suggest that this channel of going up and down will probably continue a bit. But there is also a shape which this kind of resembles, and that would be the head and shoulders pattern. Wow. I think it's the down head and shoulders pattern. Yeah. Something similar to this. So if you look at Microsoft right now, basically what happened is it dropped down here. You could sort of probably, using some sort of autistic wizardry, sort of carve out a shoulder here, and then this would be the head where it's reached its full bottom, and then right here is maybe the next shoulder, and right here is the breaking point of that shoulder. So if it were to break around $15 here, you could probably see, yeah, the price shoot up, and then it would start challenging maybe even this. And then you look on to, let's say, the long-term trend. Yeah, once it got past this sort of $15 mark, if it gets to the 16 and 17, I would see probably no breaks on the train all the way to 120. So Microsoft might, you'd have to see what the calls are going for, but maybe it would be a nice, maybe like a slightly long-term call of maybe a few months, maybe 3 or 4 months. And then you could try to maybe put the call, I don't know, maybe at 115. See how that goes. Wow, let's look at this guy. SIFs. Wow, a Chinese financial services company shooting up to 125. What is happening here? Did it do a reverse? It might have done a reverse split. I don't care about the Chinese companies really, honestly. That is a lot of volume though. I'm not quite sure what's causing this. And I'm not willing to look into it because I would never invest in a Chinese company that does financial services. Like there's no accountability. Alright, let's see anything else that gets my... Is this Unilever? United States 12 months natural gas. Yikes. It's not exciting. Alright, let's do some companies. Alright, so here's a company I've actually been looking at a lot, and I think I bought myself a few shares when it was at 48. And this is Altria, which is Philip Morris. And basically they make cigarettes, and they also own Juuls now. And I think there's absolutely nothing wrong with this company. So they have a dividend. Okay, so that right now they give you a 6.2% dividend. Sounds pretty high, right? 6.2% every year. And that out of their profit, because their stock price is about, what is that? It's about 60 now, 50 or 60. Yeah, their stock price is about 50. 52. So for every share, $52 share, they make about, where's that? They make more than this. That's bullshit. They make a lot anyways. Hey Damien, you want to be a trader? I'm 18 years old. What should I do now from zero? Okay, so it depends on how much money you got, Damien. How much money do you got? Do you have inherited wealth? I don't need like exactly how much money you got. I just need like a ballpark figure. Like, are we speaking like $1,000 here? $5,000? $50,000? $100,000? Okay, 500 euros. So let's do okay, so let's see. Okay, so you got this. Now, if you only have $500 about, we're going to give it $500. Now, regular volatility of stocks isn't going to earn you much, because if a stock goes up 10%, it'll only go up $50, and of that, the commission that you'd have to pay is probably going to be somewhere between $7 or $8 each way. So you're losing about $15 when you buy and sell, and you need to make 10%. So you need to kind of either figure out a way to get more money, or you need to figure out a way to leverage yourself, aka act like you have more money when you do. And I guess the best way to do that would be to buy options. So you'd have to get lucky in options. Now, if you're the type of person who thinks that you can make 10% in like a month or two, then you should be able to make even more than that with options. Now, I'm not suggesting that you can do it or that most people can do it, but if you want to start from $500 or 500 and something euros, you better leverage yourself. So then it's more like you're playing with $1,000 or extra. Now, the best way to leverage yourself is to find something that looks good. So, while I wouldn't suggest doing this because I have no liability here. All I'm saying is I don't want any liability here. Find a stock that's like beaten up. Oh, I got one. Kraft Heinz. So look, Kraft Heinz here. Look at this. It's $50, now it's $34. Lots of selling pressure. It's really going down. I'm not quite sure what's happening here, but if you can buy options on this, maybe like call options, and maybe put them out of the money so they're cheap, and buy a lot of them, and then you hope it goes up a bit, and then sell really quick, and you can turn that 500 euros to 1,000 euros. Kraft Heinz isn't a bad company either. Wow, the downgrades. But basically what you're looking for is like companies that are about to die, and they might have like 1 or 2 days where it goes up slightly, and then you sell really quickly. You don't want to hold these companies for more than necessary. Kraft Heinz, for Warren Buffett, but you're not trying to turn $500 into like $1 million in the course of like 40 years. You're trying to make $500 into $1,000 in like a week or two, and you need to do leverage in that case. I hope I helped you, Damien. So basically, we'll do a WordPad here. WordPad. On euros. Alright, yeah, so that's pretty much the instructions. So you have 500 euros. So then you have to find a brokerage and apply for options trading. That's super important. And then you buy something. So basically I'm going to give you it's like the derivatives 101. So derivatives 101 is calls go up, puts mean you're trying to bet on them going down. Now you're going to be only buying calls and buying puts because you would probably lose it all by selling puts or selling calls, because you wouldn't have the money to buy the shares if they get exercised on you. So you have to buy calls or buy puts. So you find something that could go up, and you buy a call on it. You hope that it works. Now the shorter the expiry, generally the cheaper the option is. So it'd have to be like a short-term call or a short-term put. So there's a lot on the line. And then you desperately hope that you choose the right direction. And then you sell for a profit, or lose all your money. Because if it goes the opposite direction, your call or put is going to be worthless. I hope that helped you out. Anyone else have any questions? See right here. Look at this, GE. You could do this right here. Look at this. So remember when I was talking about gaps ups and gaps down? So this is kind of gapped up a bit, but look, it's like it started the day up here, and now it's all the way down here. And this might mean there's a lot of selling pressure right now. It bounced off, what is this average? It's the 200-day moving average. It couldn't get above that, and it's come right down off that. So if you were to maybe buy puts right now, maybe tomorrow it's going to open lower, and then you sell the puts. Thanks, Moises. Alright, let's look at some other losers, or winners. Disney's down a bit today. Man, this seems such like a It's not like a fun stock, Disney. It just seems like a pain to hold. If you buy it here, you're like, yay, it went down $5. Oh, yay, it went up $5. Down $5. Up $5. Down. Up. And then, oh, great, it lost $15. I guess it's back up to 10 to 15. Like, who wants to play this game? It's not a good game. Yeah, so basically Disney Fox merger is going to be like basically all of Hollywood is going to be controlled by Disney at a certain point, and that's as soon as Disney and Fox merge. That's okay because I think Chinese movie industry is going to keep growing really fast, and then there's also Bollywood and Indian movie industries that are going to, so it's not like a monopoly. Uh but yeah, it just sucks because I think all movies are going to start following the Disney formula, which is a good formula. You know, there's someone, they're down on their luck. Um, they go on a magical journey, they meet someone that they're interested in, things go good, things go really good, then something goes really bad, and then it resolves itself in the end, and in the end, everyone's happy. And that's going to be like all movies in Hollywood. You know what's interesting? Everyone goes after stocks, but right now, kind of in the market cycle, there are bonds that give you about 4 or 5%, and I know nobody likes buying bonds, but it wouldn't be a bad time in your life to maybe go like 20% bonds, and then just in case shit hits the fan, you can sell your bonds. They're very protected, and then you can buy stocks cheap, because right now it's very difficult to find stocks that have a really good yield on them and that are safe. Although I do like Goldman Sachs. Alright, so it's about a bet with low input. But this summer I'll work and I'll earn oh, that's a good amount of euros. Okay, this summer I'll work and earn about 23 euros. If I don't get a computer. I'm just thinking about your question a bit. I think, like Damien, the best thing you have going for you right now is time. You're 18 years old. In 10 years, you'll be 28. 20 years, 38. You have so many years ahead of you, right? And I know past performance doesn't indicate future result, but, you know, even boring stocks like Apple, I guess it's not that boring, but it's not that exciting either. Like, if you have 20 years ahead of you and you can just put your money in anything, like, maybe being a stock trader isn't the greatest idea, like trying to trade actively, but maybe just putting it in something that you don't have to care about for 20 years would be like a really good idea. You might be able to you know, multiply whatever money you put in by like 10 times in the course of 20 years. Like if you invest in Apple or Amazon, you know, but try to figure out what's going to be the next Apple or Amazon, like maybe Shopify or something like that, you know, or Salesforce. If you have, you know, about 2,000 euros, 3,000 euros, at that point, that's when you can start buying positions. Basically, you need at least about $3,000 to make it worth your while from commissions. If you're buying and selling stocks for about $1,000 each way, like you buy it for $1,000, you're losing a lot in commissions. So you need like about $3,000. And you know, if you or 3,000 euros. I'm saying dollars. You can translate it to euros. But if you have 3,000 euros and your stock goes up 10%, that's you know, $300 at the end of a year, that's a nice little, that's a nice couple dinners or something. So yeah, it's worth it if you have $3,000 to actually buy a stock and not buy options and start building your portfolio. Probably the best way to get rich is not by trading actively when you're 18. Probably the best way to get rich is by buying things and forgetting about it for like 10 years and not trying to play the up and down game, but maybe buying more if it goes down and you know the company's good. I like, I honestly don't mind cigarette companies as a stock. I'm not saying go out there and smoke cigarettes, but as an investment, like, look, every year Philip Morris gives out 6%, right? Now, basically, it takes 10 years for you to double your money. It's like, I think it's the law of 72, where you divide it by 72, and you figure out how many years it would take for you to double your money. So, if you made 7.2% a year, it would take you 10 years to double your money. If that makes sense. So, with Altria, they give you a 6.2% dividend. So that's just 1% under 7.2. So that gives you about like 10 or 11 years to double your money, which is pretty good. And that's assuming that the stock price stays at 52. But they're also buying back shares. So in the course of 10 years, I'm certain, Altria might even be closer to 70, 80, maybe over 100. So you might have quadrupled your money if you've reinvested your dividends. So, and probably the dividend, they also increase their dividend. So, yeah. And they basically make a product that you buy, you smoke, and then it's gone, and then you have to buy more cigarettes. So, it's pretty foolproof. Also, they're addictive. But, if you have a moral compass, maybe buying Apple would be good. You could buy Visa, maybe, depending on what you believe in. Microsoft's good. I really like Microsoft. If you can buy Microsoft at around like $100 a share, it's a really good price for it. And it happens frequently. It might even happen in the next month or two, And the other thing too is you can always just hold cash on the sidelines and then wait until there's a good moment that arrives. Like last December was a good moment that arrived, where stock prices went down a lot in pretty much the entire board. It was like a 10 to 20 to 30% off sale for everything. So sometimes having cash on the side really helps. You just wait until everyone on Wall Street Bets or other places on the internet are crying, being like, I've lost all my money, I can't afford rent. At that moment, you buy. Yeah, if you have basically stocks that, like, there are companies. Okay, I have to say it this way. Just because a company gives you out, okay, I'll do Apple as an example. So Apple gives out a every share they have, everyone gets $2.92, right? They make $18 a share. So they pay out only like $3 a share about, and they keep about $15 a share. They use that $15 to buy back shares, but they also use it to grow, to do research and development. So that 2% or that 3% dividend, whatever it is now. Actually, no, it's not that. It's that. Sorry, I'm looking at the wrong thing. It's only 1% because Apple's share price is 174. So, yeah. So that 1% dividend is not going anywhere. And realistically, they could even provide a dividend that's comparable to Altria right now at 6% if they took all their cash and put into dividends. But they want to grow. They want to become a bigger company. So they're using that excess cash to hopefully grow themselves. And honestly, Apple's not a bad buy for the long term if you bought it at 174. But yeah, the other thing too is you don't want to always be like looking at your stocks, freaking out over them, because that stops you from being productive in what you normally do, which would be called your day job, right? If you're always checking your stocks every, you know, an hour or two every day, you might not be doing what could make you more money, which is like getting promoted or, not getting fired. So sometimes buying you have to think about how much time are you putting into stocks. And if you're putting an hour a day into stocks, you should at least be getting how much money you're making at work back, right? You should be at least making, at least whatever, $20 an hour. So you don't want to waste your time just looking at stupid stocks when you could be making money. So yeah, long term. Anyways, anyone else got any questions? I think you got the point, anyways. Man, GE, what a trash bin. What a piece of trash. Am I looking at that right? Did they lose 20 billion? Yeah, I think they did. Wow. Oh wow, got even more viewers. 91 watching. Alright, anyone got any stocks? Just leave a name in chat. I'll look at it. Here, let's look at Warren Buffett here. Actually, I don't like looking at Berkshire B on these stock screeners because they always screw it up. Berkshire reports its earnings as Berkshire A stocks, and those are way, way, way expensive, so can't do that. Damn, 200 watching. Must be popular. I'm studying maths, economy, statistics, but I can't figure out how I can get into the financial world and banks. So I'm guessing you're in Europe somewhere, and that means you'll probably have to figure out what country you're in. That's the first step. And then from there, figure out what's the financial system. Because each country, like America and Canada, they have different requirements for you to become a financial advisor. So in my country, there's something called like the Canadian Securities course, and then there's these other courses that you can take after that, like to become a financial planner. So you'd have to take those courses. But I have no idea how to get you into that. Honestly, investments should be kind of like a side gig to your main job because you need money to invest. And if you don't have a main job and you're just trying to turn $500 into $600, you're going to stay poor or you're going to have to pay rent at some point and you're going to lose it all. Oh yeah, I should have guessed. I should have guessed you're in France. Here, let's look at some weed stocks because I know that's what people like to look at. Jesus Christ, Canopy. Okay, so this is not a pretty chart from like a macro perspective. On a micro perspective, you could probably draw some sort of support line right here. And that would be somewhere around 42, I guess. I should really zoom up a bit more on it. Here, let's see if I can do that. Actually, I'll do, what's that called? Yeah, so for Canopy here, basically, if I could show you what's happening right here, it kind of was pretty overbought, oversold. There's a lot of trading activity, which brought it from 25 to 55. This was about the time that Constellation Brands gave them extra money. In about November, December, there was a sell-off after Canada legalized cannabis, and that sell-off went pretty much all the way back down to 25. That was pretty incredible. That was just this big up and down. And then with the start of the new year and everything, it seems to have gone up a bit, but it really hasn't. There's not much support down here, I guess. Maybe there's probably support around um, 30 to 35. There's a lot of times people bought down here, but if it breaks through 40, there's a good chance it's going straight to 35, which is a pretty big fall. If you look at really like Canopy growth and its cost per gram, I generally I've looked at a lot of marijuana stocks just because they're kind of a exciting sector for most people. And the cost per gram that Canopy has is like terrible. I think it cost them like about $5 to grow. I don't have the exact numbers on me. It's like $4 or $5 to grow a gram, and then they sell it for like $6, and then they lose also to shipping. It's like terrible. Anyways, I would not be buying at these levels for Canopy. I'd wait it till it goes at least down to 40, maybe start a position around 40 or 35. That's if I was really interested in Canopy. But I would not buy today, and this looks like it's kind of, it's kind of falling off a cliff here, It could be something like this. Could be something like this. Alright, now I'm going to look at, I guess, a stock that every single person on Robinhood apparently owns, and it's called ACB. And ACB is Aurora Cannabis, and I have no idea why people love this stock so much. It's nuts. If apparently it has even more buyers than Apple stock. It's the highest bought stock on Robinhood app. So Americans apparently buy this, and it's a terrible company. I mean, I don't think this actually has reflected the correct price of it. Oh, this is probably in American dollars, but it has about a $9 billion Canadian market cap. Has over 1 billion shares outstanding. This is wrong. It has over 1 billion. And yeah, like about 3 or 4 years ago, it had about 200 million shares out. Now it has over 1 billion shares. They just keep selling shares. Whoa. Anyways. I hope so. If you want to get into banks, there's some markets in the financial industry that are less popular, and a lot of those right now are like customer service jobs. They're cutting out a lot of customer service jobs, and but there's still a lot of analyst jobs of looking at companies, and there's a lot of institutional money. So if you wanted to work for banks or you wanted to work for a financial firm, it would probably be in your best interest to really study a lot of math and really understand how companies work. Because basically what a company is it takes money and then it figures out something to do with that money. It creates what's called value, and then it hopefully makes money using that value, right? So like if we look at Coca-Cola, the idea is you give Coca-Cola money, although this is what a share is. A share is a part of ownership, but Coca-Cola takes money, it buys sugar, it buys flavor, it buys soda, it buys a can, puts it all together, makes a tasty drink, takes about 8 cents to make, and then they sell it for $1 a can, right? That's how Coca-Cola makes money. And so you have to figure out how companies make money. It's not good enough just to look at like earnings ratios or numbers. Like numbers are important, and it gives a good estimation of how much debt a company has, and a lot of these things can be red flags. But you can't just look at a company and say, "Oh, I know all its numbers, and the numbers look good, and that means I should buy it." Because you need to know like the story of it, right? Like like retail, for instance. Like Amazon has been dominating retail. So companies like Macy's are just going down because people are buying less from stores. So when you can't just look at Macy's. Here, we'll look at Macy's right now. I think it's called M stock, yeah. Right? You can't just look at Macy's and look at their numbers and say, hey, look, they have a 6 price to earnings ratio. That's cheap. That means in 6 years they make their entire market cap back. You can't just look at that. You have to say, are people going to keep shopping at retail outlets? And if you feel no, am I shopping at retail outlets? Are retail outlets shutting down? Are the price of renting retail going up? You have to look at all these figures and come up with your own idea on why this company is going to be successful in 5 or 10 years. Anyways, if anyone has any questions, if they want me to look at any sort of stock, just leave a message in chat here, and I'll look at it and we can discuss it. If you have any questions or you have any comments, go for it. I'm really looking at Kraft Heinz right now. Like, regardless, it has a lot of good brands. Like, Kraft has a lot of good brands. Heinz ketchup is always going to be made. But how much is Heinz ketchup worth? Yeah, have a good night, Damien Tenno. So, anyways, this dividend doesn't adequately reflect what the dividend is now. I believe they've cut the dividend, so it's about 4%. But it is a good company. It's just, maybe it's bad management, maybe they have some legal thing happening. Let's see what the legal thing is. Yeah, investigation reminder. Oh, God. Man, everyone hates Kraft Heinz. But there is a value to it, and they will be able to print money. You know, ketchup is probably cheap to make and costs a lot for people to buy. Kraft Dinner probably costs like 5 or 10 cents to make and is sellable, and they have a whole bunch of products. Kraft owns almost entire aisles of supermarkets. So at a certain point, if it gets low enough, and I'm going to say maybe it goes down to $30 a share, it kind of, maybe even now, maybe it's like a good time to buy like 20% of Kraft Heinz. DM me and Telegram LAC. Check your viewers. Logging out now. I don't know what that means. I don't know what that means. Check your viewers. I guess I'm getting view botted or something. Lots of viewers. Alright. Anyone else got companies to look at? I like TJX. TJX basically it owns Winners, it opens TJX in America, and their whole business model revolves around finding clothes that won't sell in retail, and then TJX buys it or Winners buys it for a deep discount and then resells it. So basically it's everything that's brand name that they can't sell. And just by having like I've gotten like lots of polo shirts and stuff like that, and they're great. So as a long-term hold, TJX is probably pretty good. I don't think the market for cheap clothing is going anywhere. Oh, they have a bit of a dividend too. It's pretty decent. Let's see. We got AT&T here. Yeah, this is another sort of head and shoulders pattern, or downwards head and shoulders, which looks pretty bullish. They have a wow, that's a really low Ford's earnings. Okay, there's their EPS there. Seems like another decent company. I mean, about 60% of all the money it makes goes back to shareholders for a 6% dividend. It's very decent. That's a very decent company. If you were to build a dividend portfolio, you could live off that very nicely. Does HBO even have a stock? Sorry, I'm curious. Oh, AT&T owns HBO? Shit. That's pretty good then. I like AT&T then. Damn. Anyways, if anyone has any questions they want to ask your boy. Or you can give me your financial situation and I can try to help you answer questions. As a side note here, pretty much biotech companies are the most coin flippy companies you can possibly own. And so pretty much every single day, the top gainers or new highs will always be biotech companies, like Spark Therapeutics. Oh, that was a business one, but most of them will be biotech. Yeah, here's another one, IMDZ or whatever, Immune Design Corp. Clementia Pharmaceuticals. But that's like a whole nother ball game. And actually, I'm sure a lot of you know it, but Martin Shkreli has a lot of nice videos online, and you can watch them. And he knows a whole lot more about biotech than I do. $24 a share? My God. That always makes me laugh. Like $500 million market cap, and they lose 50 million a year. Pretty nuts. That means someone is backing them. Someone with deep pockets. Or a bunch of people with deep pockets. Alright. What else can we look at? SunTrust Banks, PNC, Commercial Incorporated. I haven't checked out BlackRock for a while, but it's a cool company. Basically, BlackRock owns. There's these things called iShare ETFs, and it owns these other ETFs. It owns basically most of the big ETFs in the world, and those are possibly um, the most popular things right now. In terms of what people buy, generally people they want to buy fully diversified portfolios for only a few $1,000s, and ETFs are a great way to do that. So BlackRock sells them. So basically, it's like buying the casino. Let's see what they have here. Yeah, so they only have like half. They pay out about half. So they print about 6% a year. That's quite good. That's pretty good. I think their downfall a bit is that they're slow at growth. Let's see what else we got here. I'm probably going to log out in 15 minutes. I appreciate all my little viewers watching. I guess there's Johnson & Johnson here. I could talk about that a bit. So J&J recently got into big trouble. Look at this. This is full. Um, this is just from a baby powder scandal. It's nuts. It's nuts how far Johnson & Johnson fell. It was, between 145, 150, all the way down to 130 because of a baby powder scandal. So what was the baby powder scandal? It is because it's alleged that in the 70s and 80s, now even, there's trace amounts of asbestos which could have caused cancer, right? And yeah, that's terrible. It sucks. However, it doesn't matter because that baby powder it sells amounts to 0.5% of all total sales. So if I were to, own a company like, I don't know, a corner store, and every year I made $100,000, if I were to say, oh no, I'm going to lose 0.5% of my sales next year, that would be what, like $50 or something? Should that cause you to believe that my company is worth, 10-15% less because I lost 0.5 of my sales because of baby powder? That's like worst case scenario. Like nobody buys baby powder ever again, and I'm sure people who buy baby powder don't even care. So basically, it was entirely an unwarranted fall. It's a very safe stock. If you wanna buy something for retirement, Johnson & Johnson, it's pretty hard to get worse than that. And let's see what it makes here. Yeah, it makes about $5 a share, and it gives out about $3 a share. It's a very safe dividend. This 2.5% of money, excluding recovery of the share price, is not going anywhere. And yeah, it's even higher than it was like in June. So I think a lot of people are recognizing that this baby powder scandal that brought it down so hard is useless. Like it doesn't mean anything. I'm sure. Look at this. I'll look at baby powder here. Like baby. Yeah, look at that baby powder, asbestos, baby powder. It's all just fake. It's fake news. It's fake news, boys. Fake news. Fake news. Fake news right here. Fake news. Routers is fake news. Anything else fake news? Look up asbestos. Investors Business Daily's fake news. Bazinga's fake news. Alright, let's look at organogram. Actually, what's a good one to look at? Trust. Nope, it's not here yet. Oh, it's not out here. Nope, not here. It's probably here. Here's an interesting one. Oh, that's Trust Bank. Yeah, this is an interesting one. So, CanTrust is actually a pretty good cannabis company. It's so basically companies are valued in terms of market cap. It's not in terms of how many shares they have. Or how many, yeah, it's like shares multiplied by share price. So, a $5 stock isn't cheap and a $500 stock isn't expensive. It depends all on how much you own. So, yeah, CanTrust here. Oh god. It seems like it was overbought a bit here. It's coming down a little bit off that. Actually has a bit of room to fall. I guess if it were to fall, it would fall somewhere probably around 8 to 750. And probably it might even bounce off the 8. So it could fall an additional 10%, and if that were to happen, that'd probably happen tomorrow. Or the next day, next few days. There's a general rule when watching stocks or looking at stocks that companies take the escalator up, which is like about here, and they take the elevator down, which is about here, or escalator up, elevator down. Because if it was the other way, it'd be really easy to make money. Anyways, I got CanTrust here. It's a pretty good company. It's worth about here. I can't bring up the numbers for you right now, but it's about worth 1.3 billion dollars Canadian, so even less than that American. It doesn't have that many shares out, and it makes I think it makes about 10 or 20 million Canadian dollars a quarter, somewhere around there. It's quite good. And compared to other companies, the relative value of its market cap compared to how much it sells is certainly a lot cheaper than Canopy. It's a lot cheaper than Aurora, and it has about 1/10 the amount of shares outstanding than Aurora, which is pretty nuts. I don't mean to shit on Aurora all the time, but it's not that good of a stock. Like I don't know why so many people buy it. I guess it has really good marketing. The CEO is very, or I should say, Cam Batley is pretty excited. He's a pretty excited guy. All right, what else we can look at now? Look at Comcast. People hate Comcast, at least on the internet, but they make good money. All right. I'm going to leave it open a bit. If you've got questions to ask, I'm right here. Alright, so Comcast is... Let's see how much they make. Wow, they actually don't make that much. I guess there's some growth. They want to grow a bit, but I don't know. I wouldn't buy this stock actually. I don't like the story. Maybe I'm wrong about it. I probably have to do a little bit more research into it, but Let's look at what Comcast does. What does Comcast do? What does it own? Subsidiaries. There we are. I guess it owns a lot of cable, which people are getting out of cable. They own some sports. They own some of the Philadelphia Flyers. Okay. They own the Golf Channel. Nah, I don't like Comcast. It's lame. Look at Goldman Sachs. That's a good company. Alright, here's Goldman. Hey, it's actually doing pretty well. I think I bought it somewhere around here. Not the lowest of the low, but I was spending money on other things when stocks had crashed in December. Yeah, so Goldman Sachs is pretty good. Okay, look at this. So it spends $3 on shareholders, but it keeps $24. So basically, $21 out of every share is yeah, like is kept. So it has really good earnings, makes a lot of money, has a lot of retained earnings, small dividend, but I don't know why. Like, what's happening here? I think people are selling it too because there was this crazy news story where they were selling something to the Malaysians, something about the Malaysians in Malaysia. Let's see what happened here. Malaysia may postpone the extradition to the United States. Like, okay. Remember the financial crisis where, like, Goldman Sachs, everyone just crashed the economy? Remember how much Goldman Sachs got into trouble? Yeah, they didn't get into trouble at all. And they have really good earnings. So, at these levels, you know, if I see Goldman around 180, 160, I think you, everyone you know should probably buy Goldman Sachs. Maybe, I don't know. I think they're sort of unbeatable in terms of like global banking dominance. In terms of investment banking, they are, when people think investment banking, they think Goldman Sachs. So, yeah. They have pretty good forward price to earnings. Optionable, yeah. Earnings. Yep, Goldman Sachs looks like really solid. I think just a lot of retail investors don't want to invest in Goldman Sachs. And that makes sense to me because nobody trusts them. And maybe they shouldn't be trusted, but they make a whole lot of money. So, anyways, if you have any financial questions, feel free to ask them, and I will do my best. If you have any companies that you're interested in, or perhaps you're trying to figure out what to do with your money, or how you can try to make money out of your money, you can always ask me. Wholesale inventories. Best start for stocks, yearly win. I'm going to look, what's the industry that I don't really look at much? Here, I'll go here, back again here. Oh yeah, let's look at Amazon. Now this is an interesting, okay, Amazon makes very little money, but it makes a whole lot of revenue. Let's see what the revenue is. Do I see revenue? No, they don't do. They don't show the revenue here, but it's about $200 billion. So it's over $200 billion. So Amazon makes about $200 billion in revenue. That's not cash. and then they use most of that money to reinvest in themselves. So basically, for every Amazon share that anyone owns right now, which they're going for about 1,600, 400 of that is revenue. They make for every share that you buy. It's pretty nuts. Like Amazon just like takes in money and spits it out the other side, and they make a little bit of it, but it's more of a testament to how big Amazon is right now in the world. It's massive. Like what other company, like how many people are there in America right now? 400 million people, and their revenue is 300 billion. So by that estimation, what is that? That's like about $600 or $700 per person someone uses Amazon. Like I'll just write that down so like people can understand WordPad. Okay, Amazon has about 2.3 billion in revenue. They have, let's say there's about 400 million Americans, and if you want to break that down a bit, let's see. No, it'd be multiplied by 0.4. No, that's wrong. That's wrong. Right, 230 divided by, yeah, 0.4. I think that's right. Yeah, okay, 575. So every year, every citizen in America, man, woman, and child, on average, spends about $575 on Amazon or Amazon services. It's nuts. Like, it's such a vital part of society right now, and I think that's part of the bull case for it. In the bear case, and I'm sure a lot of you guys know it, but bull means um, sort of, oh, I think it's going to go up, and bear means I think it's going to go down. The bull case, or the case for it going up, is that they're growing very quickly. Even from last year, they've increased their earnings about 40 billion. So if you have like a long-term perspective, I see no reason why you shouldn't buy Amazon if you if you think that they're going to continue to grow, and I honestly think they are going to continue to grow. If you look at Amazon as their capabilities, basically they have all the search history of what people want to buy, and they are even like creating AI that, let's say if you live in an apartment building, they could have a vending machine at the bottom of your apartment, and then people from Amazon will walk into your apartment at the bottom part, put in things that are frequently bought from that apartment building, and then you go downstairs. Oh snap, I needed toilet paper. Here's a vending machine with toilet paper in it, and a vending machine of like, I don't know what else, an iPod or something like that. And you could buy it straight from the vending machine. Like, the capabilities is actually nuts. The of what's possible with Amazon, and especially with like linking things to the Prime service, they're definitely they're putting a lot of money into new programming, such as I guess they're having shows to sort of compete with Netflix. So I really see possibly in the next few years Amazon really increasing its number of Prime members. I would say if you, and it's Amazon was $2,000 like just 6 months ago. Now it's at 1,600. If you can't afford it, it's a pretty good idea. There's other ways you can invest in it if you have less money and if you're interested. But here's Costco. Slightly more affordable shares, but doesn't mean it's actually cheap. It actually trades at a pretty high price to earnings ratio. But I love Costco because it is a recession-proof stock. If shit hits the fan, people need to buy stuff in bulk, and they're ready to go to Costco, buy all their like nuclear bunker stuff. And then, yeah, stock up on toilet paper for the year, stock up on laundry detergent, on soap detergent, get all that stuff into the bunker, all from Costco. So Costco, if America crumbles, if whatever, Europe crumbles, Costco will remain. And every time I go to Costco, or in my city, it's full to the brim. And I've yet to see it not be full to the brim. I know my Citigroup's downgrading it, but so as a long-term hold, Costco's pretty good. If I don't think I'd buy it right now, though. I'd probably try to wait till it goes down to. If it goes down to 200, it'd be like on my radar. I wouldn't buy it immediately, though. It's just, you want value when you buy a stock, and it's a great stock, but you're paying a premium for it. So I'm not quite sure if I'd buy it today, but I did buy it about a year or two ago when it was around 160, and that was really nice. It's probably one of my better purchases. Again, if you got any questions, ask away. If you have, oh, yeah, market's kind of going down a bit. We've had about 8 or 9 weeks of the market going up, so that doesn't happen that often. I think there's probably going to be a little bit of consolidation, aka things going down a little bit over the next few days. I wouldn't bet my whole house on that, but it's going to have to happen eventually. Things just don't go up forever. Man, CCI, just from a technical perspective, this looks like an easy short. Am I wrong here? I think it's an easy short. At least, yeah. I think if you buy puts for about 115, or you shorted. I don't like shorting, but it's probably safer to buy puts. Buy puts for 115, 110. That'd be probably a pretty safe bet. Probably have to be. I give them a time frame of maybe 2 months out. As soon as they're profitable. I actually kind of feel like, man, what time is it? Oh, it's past trading day. Okay, I guess market's closed. Alright, boys and girls. Thanks a lot for watching me today. Hope you enjoyed my little stream. If you want me to do more streams, let me know. If you don't want me to do them ever again, let me know that too. Maybe I won't. Alright, have a good day. And good luck and all that.